everyone, this is Rob Roy of Elliott Wave Options, and welcome to this trade review of a recently closed trade ID number 329. As you can see, it was on FSLY, a long strangle in our volatility strategy, but the high value part of our volatility strategy. If you're wondering what that is, some of our subscribers said, well, if some of us have larger accounts, could you create a category where it's our choice whether we want to follow along with the higher risk positions or not? So since our subscribers asked for it, we created it. Now, as you can see, the entry here was on April 23rd, and it was $575, so that it exceeded the $500 of max risk, hence the reason it moved into the high value portion of the volatility strategy. Now, looking at the chart, you can see a really nice Elliott wave symmetrical triangle. We had support a bit lower, down around 50, a couple gaps if it broke to the upside, so it was set up really well for a substantial potential move. Well, what ended up happening was just 11 days later, right before its earnings report, it actually broke to the downside and got to a point where it was slightly oversold moving into the earnings report. Well, with that in mind, and you can see down below, there's where the earnings reports are listed, there was an opportunity for the stock to bounce back up on its earnings and therefore take away gain that we already had in the position. And that gave us just about 35% in 11 days. So short term, a little bit shorter than the strangles usually take to generate a profit, the triangles to break out, if you will. But 35% is in the low end of the profit range, normally 30 to 70%. Now, if you take a look at the risk graph, you can see this one didn't spend much time below the zero line, which is a little bit unusual just because of the effects of time decay when you're buying a call and buying a put, even out of the money. Normally, they show in the red until the breakout occurs. Now, we like this setup so much that we actually set this up for our regular volatility strategy as well. Now notice the difference is about the same as far as the percentage return, just over 35% here, but the P&L was a bit lower, so $134 versus $196. But both of our subscription services, if you will, were able to generate a nice gain off of that. So that gives you kind of a different viewpoint. This one was $358 to get in and sold it at $492, which is less than what we paid to get into the one on the high value. So the high value, you take more risk, you generate a higher return. That's how trading works. I hope you found this informative. Look forward to talking to you again next time. Take care, everybody. If you like these recordings, I'd like to invite you to join our new Trade Finder Live, where each and every week we do a live webinar where we talk about the market, but we also go a little more in depth into the technical analysis system that we utilize to forecast where the market's likely going to go, and also to identify trading opportunities. Get your free subscription today. Take care, everybody.